comes to you. It comes to you.
Yo, 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 yo. Can you hear me? I do forget about the latency on YouTube compared to Discord. So let me know if you can hear me or not. I do forget about it. Very good, very good. Oki, what up? Yeah, I know. I just want to show the disclaimer real quick. Businessman, Charlie, Yusuf, Parapal, Jason. What's up, what's up? Good to see everybody in here. If you can just like the video real quick. I mean, I'm not expecting a whole lot when it comes to the weekly forecast, and especially the first video, but we'll get back to where we're at. Hope you all been well. Hope everything's been good. I will transition over here in a second. So let me know if you can see the screen there. You'll be able to see in a second or so. Eddie, what up? Good to see you. A lot of people have been with me for a while. Appreciate all of you. Estee Maurice, hello. Good to see you. Yes, if you're wondering now, you can see me on the webcam, so something new this year. Charlie, we'll talk about it, but yeah, I mean, I'll be here. Just want to make sure all the, does the screen look good? Can you see it clearly? If not, let me know. I know you can edit the quality, so let me know if the quality is good and you can see the screen, because I have an even bigger monitor now, so now I had to stretch it on OBS. Looks fine? Okay. Cool. Yeah, if you can just like the video, I know, again, I'm going to have to go through all the motions again of YouTube and live streaming. But I hope you all been well. Hopefully, if you've been here a long time, remember me from last year. Hopefully your trading's been good. I know a lot of you are from the private group. I've had a lot of fun working privately with a lot of people and helping them and trading by my own. Made some huge accomplishments last year, so it's been a lot of fun, man. I mean, I have some plans this year as far as the content, but it's probably just going to be the same. I mean, I do plan on doing like a Saturday psychology stream, more like a podcast, but I would like to have like an open chat where all of you can ask questions and we'll go over things psychologically, as you all know if you've been here, that are going to help all of you, even myself, that refreshing wise and going into this new year, some of the goals and some of the things that we have planned is really, really important, especially as we have a clean slate, basically. So without further ado, as long as everything looks good, we're going to be on the same agenda, same pace, same everything. Every Sunday we do a weekly forecast. Then Monday through Friday we do the live streams during the there's going to be some changes if you weren't with me throughout the private group and you've only watched me from last year and kind of now seeing things. But I've changed some things up a little bit as far as I'd say my approach to the markets. I think there's a little bit different things. Of course, as you progress, you change, you adjust, you improve. So you might see some new things. You might see I'm going to be on the seconds charts. I'll be utilizing some new, I would say, entry patterns and things that I've utilized. I think I've definitely I've gotten a lot better than where I was at. Even I was watching some of my live streams from last year. I think I'm tenfold better live streamer. I think I'm tenfold better trader than I was at. So if you thought that was good last year, I think you're in for an experience. So I know it's going to take some time to grow back to where I was at, and I do understand that going into this year I'm going to have to change some things to at least keep myself out in the public to keep growing. So I just wanted to address that. But as far as where we're at this week, it's the first week of the year. So we're in January, and really typically we don't start picking up until probably the first week of February, maybe second, per ICT and per what I've been taught. That's really the weeks that we should be focusing on. Or at least ICT has always started on those weeks, basically the first or second week. So we're going to see how this month plays out. We've had a lot of volatility over the last kind of month. Even December surprised me as far as the price action that we got, the delivery that we got. A lot of things that we got were interesting to me. We had elections last year, which were definitely pushing. I still think it's having an effect on the market currently, as far as what's going on in the world geopolitically and all that. It's definitely having an effect, but just be aware of January and where we're at right now is it's going to be a little bit more difficult terrain, I would say. At least that's what I'm anticipating. At least from 7 years of doing this, now I understand that January is typically a time where you can find yourself having a more difficult experience. And as you roll into February, March, April, into that springtime, that's when the markets sometimes loosen up. But again, we're in a very difficult, I wouldn't say difficult, a different period with the elections and all that. So, Brian, what's up, brother? Appreciate you. I always love to see you. I hope you and the family are good. Charlie, appreciate it. Simo, miss you too. Looks like my bot is still working, so that's good. I'm kind of dusting off a lot of things in here. I forgot how to do all this. It is weird that I've been live streaming on Discord for I don't know, probably 6-7 months. So I'm not used to the delay and some of the things that I have to do with OBS and YouTube live streams. So well, let's get into the weekly forecast and get into it. So this week I have the economic calendar up. We have Monday with no news event drivers. I mean, it's an orange folder, but I don't really typically look at that. Tuesday, we have JOLTS. This is all Eastern Standard Time, so that's going to be interesting. That's about 30 minutes after the open. If you've been with me, I don't trade anything. If there's major news event drivers like that, I don't trade until that news event driver releases. It's just a non-negotiable. If that is ahead of me, especially after the open, I don't trade it. I wait till that pans out, and then I'll hunt. I don't see the reason to be trading before a major news event driver. Some people have different opinions. Again, these are rules and disciplines and things that you have to sort out for yourself. If you don't have a game plan, if you don't have rules, if you don't have things that you've already worked out in your mind, and you've back tested, then you obviously are driving with no GPS, no roadmap. This is what's worked for me, is not trading before major news event drivers. So I'm not going to do that. So I already know going into Tuesday, I'm not going to be trading until that releases. Same thing with Wednesday, which by the time I roll into the open, Wednesday, those are going to be already finished. We have FOMC meeting minutes, which is different than FOMC meeting. That's completely different, so be aware of that. And then we have NFP on Friday. No news event drivers on Thursday. Per ICT in the protocol, you should be done Wednesday with NFP week. Now, over the years, and I used to follow that rule very strictly, but I think I've adapted. I'm aware of the condition that NFP can present me on, let's say, a Thursday, really a Thursday. But I honestly don't mind trading NFP. I think NFP can actually be really good at times, but I can understand the landmines that it can present to a newer student, especially with NFP. But NFP usually is a two-stage delivery. Usually once it delivers before the open, it's going to deliver one side, and the open delivers another. So I'll be trading all this week. Again, we're going to go into more details, and you'll catch up on where I'm at and everything over the next week here. So JB, what up? So that's it for the economic calendar. Where is this at? So if you're not used to it, we're not even going to cover Nasdaq right away. We're going to cover some other things, and this gives you a whole view of the market and what you should be looking at. So I don't only look at Nasdaq. I'm looking at everything in terms of intermarket relationships combined together. Now, for teaching purposes, I think that this concept can trip a lot of people up, especially newer students and people that really heavily cling on to this. I would take this as a grain of salt. If you've been utilizing it, you understand it, that's great. But as far as intermarket relationships go, it is something that I do use with a grain of salt. I utilize it in congruence with whatever Nasdaq's doing. Now, there are times where I don't look at intermarket relationships. I kind of ignore it, and I only utilize NQ. If I had to say, one tip of advice is focus on NQ and ES together. Forget YM, forget Dow. You don't need it. Throw that out the window. You don't need it. If it helps you, that's great. But I don't utilize it anymore, so I wouldn't be utilizing it. Only pay attention to NQ and ES together. Now, if you want to throw things in there such as bonds, yields, dollar index, foreign exchange all together to give you a whole view of the market as far as giving you confluence with Nasdaq, that is a good thing. So that's what I always do. I'm always looking at dollar index, bonds, yields, foreign exchange. I'm looking at the S&T correlation between ES and Nasdaq, and I'm utilizing it all together. Now, there are times where bonds, yields, dollar index, they're kind of doing something maybe stagnant, or they're doing something different than Nasdaq, and it can create problematic kind of analysis. If I start to see that, that's where I start to kind of put it on the, let's just say, on the bookshelf for a little bit. So this may sound difficult to understand, but I think it's an experience-driven thing. If you've utilized these things, you kind of understand what I'm getting at. When they're all working together as far as their relationships, it's really nice, man. And that's the reason I'm going to go over them, because I think that these are somewhat really well right now. So it's also good to go into the new year and look at these things and give you a kind of a perspective as far as the higher time frames, is what you should be looking at this whole year. So this is dollar index on the monthly chart. Since the elections, again, we're kind of coming off of the backbone of the elections, which has pushed a lot of volatility into this market and pushed a lot of volume into this market. And it's still, I think, having an effect on it. So dollar index, we've risen, and we've basically drawn up into this monthly sell side imbalance, which is resting right here. If you look at the weekly chart, may give you a little bit better view here. We have some relative equal lows which are resting beneath us, but we've utilized this buy side imbalance here. We drove up higher, got into the sell side imbalance. If dollar index keeps pressing higher, then what would that mean for NQ? Well, that would mean that we should be looking for lower prices on NQ. If dollar index is heading higher, then that should be in confluence. Now, people, when I talk about dollar index, they get really hell bent on looking at dollar index on this and like day-to-day intraday bias. Like every tick that dollar index does, they start to look at NQ and they are like, well, dollar index is going up today, or not even necessarily that day. It's just in that moment, and they start to question NQ. This is again what I'm trying to emphasize. I'm just stating it off the bat, is utilize these intermarket relationships with a grain of salt and just utilize it, or at least study it, and study the correlation, but always stick to NQ and ES together. I think those two are always going to give you exactly what you should be looking for, and then throw these in there. So as far as what I'm looking at, dollar index is driving higher. I'm not going to go too much on this because I think it can confuse people, and I've seen it within my own mentoring with other people. It does confuse people a lot. So I'm going to try my best to keep things a little bit more simpler. That way it doesn't confuse people. Bonds. So bonds, if we're looking at this and utilizing it for NQ, bonds are moving lower, right? So if bonds are moving lower, then we should see NQ moving lower. And if we're seeing bonds and NQ moving lower, we should see dollar index do what? Go higher. So that's correct, right? So bonds are moving lower, right? I'm not looking at, lower time frames. I'm just sticking at these weekly, monthly, daily charts, and I'm just seeing the overall order flow of price. And if it's trending lower, then, I can utilize it. As far as yields, so what are yields? Yields should be going higher in confluence with dollar index, and it should be doing the opposite of NQ and bonds. So are these relationships correct right now? Yes, they're correct, right? They're correct. They're moving the way they should be. So that gives me confidence and confluence to look for really lower prices than NQ, or at least expect it, anticipate it. But if NQ is not showing me that technically, then I won't use it. Again, this can be confusing for people. I know there's some people in the chat that I already see in here who've been trading for a while and utilize intermarket relationships. It is a difficult thing to understand, but hopefully if you do study this and you do utilize it, it really can help you. So if we go over to foreign exchange now, right? Foreign exchange, anything with, let's say we have Euro, USD, anything with the currency then USD, it does the opposite of whatever dollar index is doing. So what are all these doing? Dollar index is rising, and what is Euro doing? Euro USD is falling lower, right? It's collapsing lower. What's GU doing? This is British pound USD. This is going lower. What's Aussie doing? Australian dollar. This is moving lower. New Zealand dollar. This is all moving lower. So if all these are, do you see how the correlations, the relationships are all in sync so far? This is when I would go over to Nasdaq and I would start to look at it. And I would start to look at it through the lens of, well, I should be expecting lower prices out of it, or at least that's what these relationships are telling me, that I should be at least anticipating it. Does that mean I'm automatically saying, look, I'm selling this thing right away? No. It may not give me that setup. It may never do it, but that's the relationships and that's what it's telling me. So I have to look at that through the lens of, intermarket relationships and look at NQ that way. And at times when this thing, let's say NQ collapses, that's the icing on the cake. That's the thing that you're not seeing when people look at a 1 minute time frame, right? They're looking at a 1 minute time frame and they ask all about these models and these things that they should be looking for as far as ICT. That's to me the least important. Looking at the overview of the market and the things that we are trading are going to help you the most. So even on a monthly time frame for Nasdaq, it doesn't show me a whole lot. We're on March 2025 contract, if you haven't switched over, but even the monthly time frame doesn't give me a whole lot. I haven't been here since last March, but I've been trading with my private group. We've reached into all-time highs in December of last year, and since then we've kind of fallen away from it. So even looking at the weekly time frame, I'm not going to draw a whole lot of things on here. Again, I don't know. I'm trying to remember where I was at. I've improved a lot from the last time I was even here last year. So if you see me doing things differently, or maybe I have a lot less annotations on all the time now. I very rarely mark a lot of things up. I very rarely annotate things. I'll say them. So just keep that in mind if you are newer. I mean, I know a lot of you are more experienced. I see a lot of you who are, here from last year. So, but like this orange box, right? I may have to make like I forget how much YouTube comments. I know a lot of them ask a lot of questions over and over again. But the orange box is an inversion. For me, I create it, I color the color orange for an inversion. If it's a buy side imbalance, it's going to be blue. If it's a sell side imbalance, it's going to be red. So on and so forth. But you're probably very rarely ever going to see me put in this text box like like this. You're very rarely going to see me do that anymore. I don't know. That's just something I've become accustomed to. But anyways, looking at this, I mean, I don't have a whole lot of information, to be completely honest with you. If I'm looking at this order flow in here, I'm looking at this down close candle here, which would actually technically be a propulsion block. Propulsion block is, you have an order block here, and price dropped down into this and expanded away from it. So this first order block here, we've expanded away from it. So this down close candle here would be your propulsion block. In simpler terms, it's an order block. But if you want to get technical with it, that's what it is. So we've utilized that once, twice. We're also inside of this buy side imbalance, which is right here. So what does intermarket relationship say to us? Well, it tells us that I should be expecting lower prices out of this so far. I should be expecting lower prices out of Nasdaq. When I look at Nasdaq just through Nasdaq and its lens, so far it hasn't broken something to where I can really be hell bent on looking for lower prices just yet. At least it's like on a weekly time frame. For me to be really clear on it, I would like to see this buy side imbalance be fully closed through and us starting to trade or close beneath the mean threshold, which is the 50% of that propulsion block, right? So if we see let's say this week where we close off lower, we close beneath the buy side imbalance here, the mean threshold of this propulsion block, that's where I can start to look at other things and say, okay, well, it matches the intermarket relationships. It matches technically that I should start to expect lower prices, and that's where I'll start to look for lower objectives. So that's really it on the weekly time frame. There doesn't need to be a whole lot more. When we go into the daily time frame, I think it's a little sloppy currently, but we'll see how this week plays out. This is where, since I already have kind of the, let's just say, hat tipping from intermarket relationships, that I should start looking for lower prices. And even technically looking at NQ and what we've done on a daily chart, we're really failing to go higher. We're utilizing the buy side or sell side imbalances and sell side PD arrays. Then I should start looking for potentially lower prices and expect that delivery. I all the way down here. This has been on my mind for a while now, but these relative equal lows down here, I think could get cleaned up eventually. I think that's where price could eventually lead to. Looking at the daily time frame order flow in here, we've utilized this sell side imbalance here, which is inside of a premium. So from this dealing range, high to low, we've gone up into optimal trade entry, which is inside of a premium. If you look to the left of you, both of these, or at least the last up close candle, is your bearish order block. So we've gone up into that, and then last week we rejected and we sold off. It looks like we tagged this low on Thursday of last week, which is resting right here. We ran that out. So since we've made a new low, right? Since we've made this new low, then we can anticipate a potential retracement. Anytime you make a new low, as far as the dealing range, you make a new low. Price could potentially retrace for, back inside of a premium to potentially sell off again. Now, when I look at this next dealing range from this high down to this low, I don't see really a whole lot inside of there. And what do I mean by that? Well, I see an inefficiency up here, but to be honest with you, I don't really prefer it to go back inside of there. Well, CJ just said that that's inside of a premium. Why would you not want it to go up into there? Well, it's just, I guess, what I'm currently feeling. Again, a lot of things sometimes come from an experience. It can go up into there, and we could sell off away from it. I'd rather see it as a breakaway, to be completely honest with you. Meaning, I would rather just see it have speed and potentially move away from here. If you go out to a different time frame, I guarantee you all of these combined into one, which would be a bearish order block. And I bet on lower time frames, I bet I could find something inside of that. So we'll just see how we open up this week. But if I had to make the argument, if you guys remember, and I still utilize this to this day, as far as teaching and even in my own analysis, I'm always a detective. I'm always looking at price through the lens of, if I was to be bullish on this, what would be the argument for it? And is there enough evidence on this side of the case for me to make that? And does it outweigh the other side? Well, when I look at it through the lens of intermarket relationships, all of them are telling me that I should be looking for lower prices. We're starting to break down on the weekly chart. The daily chart, we're starting to break down. We're starting to respect bearish order flow. When I look at the bullish side, well, intermarket relationships are completely against it. When I look at the bullish side, technically, I can't see anything that would make the argument for higher prices out of here, to be completely honest with you. I don't see the point. If we were to really sell off like we did, I would have liked to see a just continuation away from it. So I think it's a little bit sloppy right now, and this is something that you can expect going into January, is a little bit less precision, a little bit harder price action at times. So just keep that in mind. 4-hour time frame. Again, we've taken out this low here, and then we've seen a retracement off of that. So anytime you make a new low, and this is basic market structure to me, is when you make a new low, price can have the ability or the allowance to move back inside of its new dealing range premium or discount, whatever one you're looking at. So since we made a new low under this low, from that high to that low, equilibrium's resting right here, premium's up here. I just think it's a little bit sloppy. I'm just going to be honest. Sometimes I really don't know what price is going to do, and I think that's completely okay. If you've been here for a while, that is a superpower in and of itself. If you are looking at price and with experience and with the things that you know, and you sit there and say, well, I really don't know what the hell price is trying to do, I don't have a whole lot of confluences, I don't have a whole lot of evidence, then you shouldn't be pushing price. You shouldn't be trying to push something that you don't have really an idea as far as what price wants to do. As far as we're at, like let's say an hourly time frame, we're inside of this sell side imbalance, which looks like we've cleaned up some buy side liquidity here. We have another sell side imbalance, which is up here. So if you plot on, these are your new week opening gaps. Blue is the previous new week opening gap. The neon is the current new week opening gap. The purple are new day opening gaps. If you'd like to see the settings, because I'm sure I'm going to have questions over it. I don't need 5 new day opening gaps. I probably, typically I'll do 2 or 3 at most. As far as previous new week opening gaps, usually typically about 4, maybe 5, depending on where we've opened and how close in proximity they are. But right now I do like the way they're kind of stacked. So that's kind of where I'm at there. And as far as lower time frames, when you start off the week, I mean, to me, it's really no point to it. I would like to see how the week opens up. I don't really have anticipations for tomorrow. As far as Monday, we don't have any news event drivers. I'd probably be looking to engage on Tuesday. Since we have a news event driver and since it is NFP week, then I'll be looking to engage probably right around Tuesday to Wednesday, and maybe sit out Thursday, then come back on NFP on Friday and trade that. So that's kind of my roadmap so far. Let's go over, last but not least, would be ES. So I can split this so you have an idea. And this has to change over to March. So this is, for me, what I'm doing on a weekly forecast is I'm looking at all of these things. I'm gaining, some perspective as far as what price is doing intermarket relationship wise. Where's the objectives on NQ? What am I looking at as far as the economic calendar? And then last but not least, I'm looking at SMT between ES and NQ. So I used to utilize NQ ES and YM together, but I've dropped YM. I mean, I did that. I think I did that during the live stream last year. I mean, I haven't utilized that in, I don't know, months, 9 months. It's been a long time. So the reason for that is I asked ICT, since I'm a private member, in our group chat last year, you know, it was one of the days that I got tricked up on YM. I said, well, why aren't you using YM? And he said, don't utilize it as far as intraday wise. He's like, I rarely ever use it. If anything, drop it. And since then, I've dropped it, and it's never caused me any issues. Only utilizing ES and NQ together. SMT, I utilize it every single day. It's definitely something that is worthwhile to study if you don't know it. But I only utilize these together. So let's look at... see here. So I may have to make the crosshairs a little bit more. I think the weekly chart is going to be the best here. These two have been a little bit out of sync. So, and again, when we're building a case, you have to look at this perspective and say, okay, well, this is starting to make sense. SMT, if you look at Monday, well, December 9th, this weekly high right there, right? What did NQ do? And why did we see the sell-off up here? Well, you see NQ making a higher high while ES was doing what? ES is making a lower high. It's failing to make that higher high, right? So if you go out into like a daily chart, you may be able to see it a little bit better. So let's go into a daily chart, right? So that high there on Wednesday when we had this massive drop, before that, we're having an SMT divergence. Between the two. AK, yeah, that's okay, man. You use whatever helps you. So that's what I'm spotting there on a higher time frame. And people ask me all the time about SMT, and as far as what time frame do I utilize it? I utilize it on every single time frame. Again, when we're looking at a higher time frame perspective, what does that mean if I see an SMT there? Well, to me, the SMT would mean that it should be prolonged. Right? If there's a bearish SMT, you should be expecting it for a longer period of time. If it's on a lower time frame, I'm expecting it to play out for a shorter period of time. Does an SMT automatically mean that it's correct? No. But if you have things in confluence, everything that we just talked about tonight, then that would support the case again for lower prices. So and here, ES failed to make the lower low. Again, with SMT, you also have to take it with a grain of salt and understand the actual order flow that's there. SMT is something that you have to understand first, the order flow and what it's trying to seek. And if you can utilize it in confluence, as a confluence, then that will help you. So that's really going to be it for the weekly forecast. I don't really have too much. I mean, I really got to be, you know, on a Sunday, there isn't too much that I can look at and prepare for at times. Besides really the economic calendar and overviewing some things. And really, you know, Sundays should be for prepping, right? Not just technically, but psychologically going over your game plan, the things that you have set for yourself as far as your rules and your models, psychologically, you know, how to handle yourself when you're met with emotions and you're met with the things that are challenging you, right? So, let me look at the chat here. Bro, you took some I's last year and cut, and you back even stronger now. Yep, I took a whole bunch of L's and I'm back. Guy Jones, what's up? And JB, yep. So, I think tomorrow the review should be done too. I'm gonna have a private members chat that it's gonna be about $1, I think, to join it. And the reason for it is I'm not dealing with this year with a lot of just constant trolls and stuff. I'm here to trade and teach, and I really don't care about paying attention to comments. So if you want to be in that, it's only $1, I think. I don't know if it's a month or whatever, but it's only $1. So if you want to join it, that way you can chat in there. Otherwise, it's gonna be private. So I think it's pretty fair. It just keeps out a lot of nonsense. I don't have to deal with all of that. It's quite annoying, to be honest with you, and I'm already seeing it today. So, Nikki, appreciate you, brother. yeah, I'm happy to. Oh, Flatwood, what up, brother? Good to see you. So that's gonna be it for tonight's live stream. Hope you guys enjoyed. I'll be back here tomorrow morning for the open. Till then, have a good night, everybody. Be safe. Peace.